On December 14th, X1, Roofer Co. received $5,000 cash from House Co. to install a new roof in February X2 of the following year. On February 8th, X2, the roofer incurred $3,000 of cost to install the roof. Record all required entries and adjusting entries for 20X1 and 20X2 as per the revenue recognition principle. Per the revenue recognition principle, when should the roofer recognize the revenue? The answer is when those revenues are realized or realizable and he's earned it. Well, how does a roofer earn revenue? He puts on roofs. So 12/14, he received payment, cash was received, but no revenues are recognized because he hasn't done any work yet. Whereas on February 8th, he did the work, and that's when the $5,000 of revenues will be recognized. Let's do the journal entries. On December 14th, he received cash. What should the credit be? It can't be revenues because he hasn't earned it yet. In other words, he owes that service, and therefore it's an unearned revenue. Posting the unearned revenue to the unearned revenue account, that's a credit of $5,000. As of the end of X1, no adjustments are needed because he hasn't done any work to earn that revenue. So the ending balance is still $5,000. In the following year, when he actually does the work, he's going to recognize revenue of $5,000 and reduce this liability by debiting it. He also needs to recognize the related expense, which is $3,000. So he may have taken the asphalt shingles out of his inventory, credit that, and debit cost of goods sold $3,000. And we'll assume he did all the work himself, so we won't worry about the employee wages expense. By posting this debit to unearned revenues, we now can update the unearned revenue account to show that the balance is zero. To summarize what we just did, on 12/14, the roofer received payment, but we knew that no revenue should be recognized. Then on February 8th, he delivered the service, and we knew that $5,000 of revenues should be recognized. Is that what made it onto the income statement? Yes, we had $5,000 of sales revenue in X2, and we had no revenues in X1, and we've handled that properly.